Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there, and welcome to Show Me the Crypto. My name's Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the space help deliver you with value. And on this episode, we're joined by Bobby Ong, co-founder of CoinGecko. Bobby discovered Bitcoin in 2013, and at the time, he noticed that many of the existing crypto price tracker websites looked like something out of the 90s with primitive designs. He and his partner TM Lee set out to create a better product. In 2019, Bobby was named one of Forbes Asia top 30 under 30. Bobby, welcome to Show Me the Crypto.
Thank you very much for having me. Great pleasure to be on the show.
Yeah, we're really excited to have you on. So I mentioned in the bio that you discovered Bitcoin in 2013. How specifically did you come across it, and what was your initial impression?
Yeah, so I was trying to learn how to code, and I spent a lot of time in tech forums. So there was this tech forum called Hacker News, which was run by Y Combinator, and on this. And it kind of it's like a Reddit for tech news, and on that board, a lot of people from Silicon Valley reads it, and they were sharing news on Bitcoin. So I kind of stumbled upon it, and there was some news of some companies doing fundraising back in 2013. So I got curious. I just graduated with a degree in economics from University College London in England, in the UK. So I got curious, like, I was curious about this. I supposedly know everything about money, right? I mean, having just graduated with a degree in economics, but my lecturers did not mention Bitcoin at all. And there's this group of guys in the tech scene in Silicon Valley talking about this new form of money called Bitcoin. So it got me really curious on what is this new form of money. I didn't want to be obsolete immediately out of university. I don't want to be a dinosaur. So I thought, like, the least that I could do is, read the white paper. I mean, I've read so many so many papers in university. What's another paper, right? So I just read the paper, thought that, okay, this is interesting, a peer-to-peer currency that no one controls, that no government controls. And I mean, we've read all the stories about banks freezing your money, your accounts. PayPal was especially notorious for freezing accounts back in the days. So I thought this could be an interesting solution to PayPal freezing accounts. So that really drew me in. And the quantitative easing of after the financial crisis of 2009 kind of, made me think that this kind of constant money printing by the Fed can't really be sustainable. So, I mean, reading the white paper is one thing. I kept an open mind. I think a lot of my friends who study economics kind of kept a close mind, and they kind of dismiss it. I talked to many smart friends who did economics back in my days, and they were dismissive of the idea of Bitcoin. But I kept an open mind, and I say that, if this could be right, or this could be wrong completely, right? I mean, it could blow up, and it could be a complete scam, Ponzi, whatever it is. But I say that, the only way to really know it is to kind of play around and try out this technology. So I kind of made the decision to, spend a small amount of money and buy some Bitcoin. Buying Bitcoin back then was not the most pleasant experience. There was no exchanges. I had to use a peer-to-peer exchange called Local Bitcoins. And it's kind of like Airbnb, where instead of finding a room that you want to spend your night on, you kind of find a buyer or seller of a Bitcoin, and you kind of have reputation of these traders. And I kind of selected some random guy who supposedly had a high reputation, and I say, I want to buy Bitcoin from you. And he sent me his bank account, and it was just some random dude on the internet. And I just sent money across to him. And a few hours later, the money was in my escrow account, Local Bitcoin. So that was interesting. I got money by I got Bitcoin from sending money from some random stranger. And I kind of withdraw it to a custodial wallet, a non-custodial wallet that I control myself. And that was when I see the power of Bitcoin, right? Like, for the first time in my life, I fully control this asset that I have, and no one can take it away from me, not even the government, unless they have to force me to do it, but that was truly groundbreaking technology. And the more I read about it, the more interesting it becomes. And then you start looking deeper into blockchain and smart contracts and what it can do. And pretty much what we see now was kind of all written in paper, in concepts, in ideas back in 2013.
Roughly at that time, for our audience, what would the value have been on Bitcoin on like a USD equivalent?
Yeah, it was around $100 or so, right? Roughly 150, I think, was my first purchase price for Bitcoin. And then it kind of went up over the time quickly. I remember buying all across up to $1,000, up to the January 2014 crash, when Mt. Gox kind of crashed. I felt really stupid for a few years buying because Bitcoin crashed from $1,000 to $200 in the next 2 years. But look where we are now. $1,000 looks cheap in comparison.
100%.
Feel pretty smart now.
But I felt stupid for a few years, right?
Yeah, for sure. Actually, when that happened, did you there's been a number of peaks and valleys. If you've been in it all as long as you have, were there times where, aside from feeling stupid, maybe you actually sold all your Bitcoin because you weren't sure if it was going to last?
No, for me, I didn't really went all in, right? And this is kind of advice that I always tell people. If you want to kind of dip your toes into Bitcoin, don't mortgage your home and buy Bitcoin. That's ridiculously irresponsible. What you should do is just take a small percentage of the net wealth. It could be anywhere between 1 to 10%, and then kind of buy Bitcoin based on that. So I was fresh grad. I was a student out of college. I didn't have much money. If I lose everything, so be it, right? But I only put in 1 to 10% of my wealth back then, I suppose. And because it's a small amount of my wealth, it wasn't much anyways. I didn't really care if it goes to zero. So when it went down 90% in 2014, 2015, 2016, it didn't really impact me. And kind of because I kind of spent a lot of time, I saw the technology improvements in it, I kind of made more, spend more belief in it further. But generally, because if put a small percentage of it and I always tell people kind of hold long term, and this means at least 5 years, because the cycle for Bitcoin is roughly around 4 years because of the halving cycle. So the trough and the peaks and the lows roughly take 4 years to kind of go its full round. If you hold more than 5 years, you kind of good, I suppose. And these days I start telling people, Bitcoin, you should start thinking of Bitcoin as kind of your retirement savings account, kind of buy and hold forever and then forget about it for 20 years. If it works out, good. If it doesn't work out, then you still have your equities and all the other portfolio that could cover for your retirement, right? So kind of looking at 20 years horizon kind of for Bitcoin.
Nice. So April 8th was your 7-year anniversary for CoinGecko. Congratulations on that.
Thank you very much.
How did the idea for CoinGecko come about, and how has it evolved over that time?
Yeah, so back in 2013, I was kind of into crypto, and I wrote a newsletter called Altcoin Weekly. So I kind of basically, and back then there wasn't a lot of news on cryptocurrencies. I could literally read every single news written on Bitcoin or cryptocurrencies back then, or blockchain technology. And I kind of curate based on all the news I read, I kind of curate a top 5 or 10 news for the week and kind of send it out to a group of people. And I was kind of doing community management, a lot of this marketing stuff. My partner, TM, he runs kind of a payment processor for Bitcoin. So he uses Coinbase API and kind of allows you to sell digital products and pay with Bitcoin. So kind of like a Gumroad, but with a crypto payment processor in place. So we kind of had separate. He did his degree in computer science in Purdue University, and we kind of came together and met, and we decided that this is probably an interesting industry. We are both interested in it, and we come from a different perspective. He comes more from the tech side, and I come more from the finance marketing side, right? And I thought we kind of brainstorm on things that we could kind of do in this industry, and we set at a coffee shop in Malaysia, and we listed down all the things that we could possibly work on in this industry by the side. Back then there wasn't really much conversation about altcoins or smart contract. There was no Ethereum back then. It was mainly a conversation on Bitcoin. So we had on our list, I have screened a piece of A4 paper, a white piece of paper, and we had like Bitcoin mining, Bitcoin exchange. The most obvious idea back then was running an exchange. Everybody wants to run an exchange because that's where the money is. Every time you do the fiat crypto on-ramp, we had an exchange, we had a mining, we had a bunch of different ideas out in the space. At the end, we decided not to do an exchange because we felt that we didn't really have the expertise to kind of deal with bank accounts. I mean, bank accounts are constantly being shut down. We don't have the expertise to deal with regulators back then. And we decided that, we probably have the expertise to build a crypto data aggregator and serve the rest of the world, because a lot of aggregators back then or pricing websites were pretty badly designed, as you said earlier in the introduction. So we thought like we could do a better job, and we decided to build on it, and turns out that it has been a pretty good decision back then. We never knew back then, but I think it's turned out quite well for us. So yeah, that's how the genesis of the idea came about.
Is it true that you considered CoinTeddy for the website URL in the early days, but decided against it because of the association with a bear market?
That's right.
I love that.
Yeah, I mean, the idea, a lot of people ask us how we come about with the idea of a CoinGecko name, right? So some people say that we get the idea from Gordon Gekko, like the Wall Street Financial. Yeah, right. Could be. You could kind of make that. But the idea was actually pretty simple. We wanted a mascot and kind of have a friendly face to the brand. It doesn't have to be very serious sounding name. A lot of financial firms are very serious sounding names, and they don't really have any fun in their work. But we thought that, it doesn't have to be, it can be fun and accurate, and all this information can be right at the same time. So we searched around for an animal name that ends with .com, and Gecko was available. Teddy just couldn't make it, right? It's just no way we can call ourselves a bear market. Everybody wants to be a bull. Yeah.
Nice. So it's been 7 years, and the website has no doubt, a popularity of CoinGecko has grown in that time, as the whole crypto space has. I know that for us, we are both CoinGecko users. I use your platform all the time, and we're there refreshing and checking out the latest prices. Yeah. So how has your web traffic looked like? Has it just gone through the roof, especially over the last, 6 months to a year? Or, do you ever look back on that and just think, wow, like I can't believe how much traffic we get today compared to what we used to get?
Yeah, I look back some of my old Facebook posts, and like I used to be really excited that we got like 1 million page views a month, and that was, I don't know, a few years ago. That was a big thing, right? To build, two guys from Malaysia, like some obscure country in the East, like who cares about Malaysia, for example, building something for the world and driving 1 million page views was a big thing. Like, and now, like, so one thing's for sure, right? The industry is really volatile, and our traffic is very volatile as well. It correlates quite closely with the price of Bitcoin. So when Bitcoin price goes up, we get a lot more traffic because a lot more people are interested in checking out Bitcoin and all the other altcoin prices as well. And when the price goes down, like no one's really interested in seeing their portfolio value goes down. So we kind of lose a lot of traffic as well. Between January 2020 and January 2021, our traffic has increased 10x. But I would say that January 2021, I think we kind of almost reached the peak that we received from the previous cycle, which was in January 2018. Mm-hmm. So you can imagine, like, we had a peak in January 2018, and then in the next 2 years, traffic kind of went down 90%, right. And then went back to the where we were in January 2018 this year, and then now we have gone past that previous all-time high. So now we are definitely doing a lot of traffic. In the last I checked, we were top 400 websites on Alexa, the third largest crypto website in the world. And we do about close to 250, 300 million page views per month these days. So definitely,
that's incredible.
Yeah, quite a big responsibility on our side because a lot of people like you and the rest of people listening and checking our site, relying on these prices.
Yeah, no doubt. I have so when I got into crypto, which I was a little later to the game than you, full cycle behind. So I got into it like mid to late 2017, and I've stayed. I paid attention to it since that time. And now this could just be my singular experience, but at the time when I got into it, CoinMarketCap, one of your competitors, was, as far as I could tell, kind of like the go-to. And I wasn't even aware of CoinGecko at the time. Now, I probably didn't search around hard for an alternative, but I still wasn't super aware of it. And just staying in the space and paying attention, something that I did notice is the way I got introduced to CoinGecko was really because it seemed like within the social community behind crypto, I feel like CoinGecko started to get a lot of traction, and so social media influencers or YouTubers started to adopt CoinGecko more so as their go-to. And I'm not saying it's everybody's, but it seems like the popularity behind CoinGecko at least from my perspective, seemed to take off at some point in the last year or two or three. And is that true, do you think? Like, did you see that in your numbers? And if so, what do you think has propelled CoinGecko to kind of push forward faster than the competition?
Yeah, definitely. Good questions that you asked. Interesting kind of battle that we have with CoinMarketCap. So, you're right. In the early days, CoinMarketCap started maybe a few months before us, and I guess they were more focused at the start, and they kind of got the early users mindset, and they had a first mover advantage. So that first mover advantage that they received was so strong that we couldn't challenge them for a few good years. I mean, there's a few reasons as well. It was kind of a side project for us for the first few years. We only really went full time in late 2017. So once we started going full time and started building a team and growing it, I think we were very focused on growing things. So things started moving quicker. A couple other reasons as well. I think sometime in last year, Binance announced acquisition of CoinMarketCap, and that acquisition kind of took a lot of core crypto users the wrong way. They didn't really like the fact that an exchange owns CoinMarketCap. I think they made a few snafus as well. They kind of immediately after the acquisition, they kind of made Binance the number one exchange. They called BNB the number one DeFi token. So a lot of people didn't really like those mistakes that they make. And they were looking, a lot of crypto influencers were looking for an alternative to CoinMarketCap. And the next best one on the list was thankfully us. And I guess a lot of people kind of migrated over to us. And there was one big migration, I suppose. The other thing that we did right, I suppose, was we were very big on DeFi. So we didn't even know that DeFi is going to blow off last summer. We published a book, How to DeFi, in March or April 2020. So basically it was a kind of a simple guide, a beginner's guide to get started with DeFi. Like, so we have step-by-step guide on how to use Maker, Compound, DYDX, put together Uniswap, for example. And anyone who actually read our book last year would have received the airdrop from Uniswap, would have received the airdrop from Put Together, and all these things is worth tens of thousands of dollars these days. I mean, if you held on today. So we kind of were big into DeFi even before DeFi was kind of a thing. And because we were kind of pretty deep into DeFi, we started tracking all the decentralized exchanges around DeFi. So we were the first aggregator to track Uniswap, Balancer, and all these other decentralized exchanges. And as we remember, like last year, there were a lot of tokens that were launched on Uniswap and Balancer, and we were the only aggregator that could track the prices for these coins, and that kind of provided us with a head start to kind of gain users, especially those that are big into Uniswap coin trading. So that was the catalyst, I suppose, that helped our growth last year. The other thing that kind of helped as well, this was maybe something on the side note, was we were the first crypto aggregator to sort of find a solution to the wash trading issue. This was before DEX was kind of a thing. So if you remember centralized exchanges, a couple of years ago, there was a lot of exchanges doing fake wash trading, especially the Asian Chinese exchanges. They were kind of inflating their trading volume because on aggregator sites like CoinGecko, historically we've always and we kind of followed this from the traditional aggregator or exchange route, where people used to sort tickers by trading volume, and you can kind of see which exchange has like the highest volume, highest liquidity based on the volume. Historically, this has been correct in the traditional market because nobody can do wash trading there. But in crypto, there's no regulations. So people kind of just put whatever numbers they want and just to appear at the top and give the impression to other users that they have the most liquidity. It came to a point where it's so bad that we couldn't take it anymore, and we came up with a metric to kind of look at order book depth, look at web traffic, look at a few different metrics to kind of come up with a blended trust score on CoinGecko. And we use these to sort of sort the decentralized exchanges to kind of funnel users in the direction where we think these exchanges, the bigger exchanges, have the that are more legit compared to the smaller exchanges, for example. So this was one of the things that we did as well that kind of changed the crypto industry.
What's the process in general when it's decided, or CoinGecko is deciding like whether or not to list a coin? I mean, there's thousands, right? Is there a process that you go through?
Yeah. I mean, we get so many of these questions these days. So we have a simple checklist of requisites, requirements that a coin we have to fulfill before we list these things. It's a pretty lenient requirement list, and generally we try to list coins as much as we can. But if a coin does not even meet this minimum set of requirements, it means things are pretty bad with these coins, and we don't really want to list coins that will get rug, for example. We try our best not to, but sometimes things happen, right? So we have all these warnings that coins may get rug, especially if they're listed only on a DEX like Uniswap or PancakeSwap, for example. And we have seen multiple times that these things happen, especially coins that are anonymous, because the downside for them running away is so much lower, right? But we can't say that we cannot list coins that are run by anonymous team, because I mean, Bitcoin by itself was started by anonymous founders. So a known team is not a requirement or prerequisite to be listed, but we have a set of other requirements that we check before we list these coins.
And then in terms of delisting, I mean, like a rug pull event would seem like an obvious red flag where you might do that. But are there any other, can you think of another circumstance where you might delist a coin or a project?
I mean, a rug pull, even if it happened, like there may still be users who still trade the coins after a rug. So, I mean, a new set of users could add liquidity, or they could turn around things. So it may or may not delist the coins, even though a rug may have happened. But typically coins get delisted from CoinGecko on two main factors. One is there is no more trading activity, like it just kind of died a natural death and no one really cares about it anymore. So it automatically gets delisted after a certain amount of time if there's no trading volume. The other main thing that we delist is that if it infringes on trademark or copyright. So for example, if someone claims that, hey, I'm launching a Tesla coin or McDonald's coin or Samsung coin, for example, we generally don't list it. But if we accidentally do list it, like we have to delist it because I mean it's just a matter of time before we get a trademark infringement letter from their lawyers to delist it. The other main thing as well is there may be coins that started out pretty innocent, but eventually we found out or we received complaints from users that these coins are involved in wrongful financial dealings. So they may be blacklisted by a certain regulator's website. So they may be involved in some MLMs or some scams or things like that. So if we see any coins appearing on any financial regulator's website for being suspicious, we'll just pull it down. There's no real benefit for adding these coins or having them on the site, because it may harm more people than the potential benefit that may bring in.
Ulf, do you realize that our audience has either been watching or listening to this episode for 20 minutes?
20 minutes? They should probably subscribe.
Yeah, they should subscribe, and they should like and comment and hit that notifications bell.
Oh, and did you tell them about the NFTs?
That's right. We have our own NFT for our OG supporters. This is a way you can support our show, help us bring you continual great content. Information on that is below.
Yes. So, Bobby, I was wondering, one thing that I've noticed on CoinGecko for certain projects when I go into the coin. Now this is, few and far between, but there'll be notices or kind of like alerts depending on if there's an event or like a migration to maybe it's a new coin that's being launched or a change. And for those types of notices that the user might see, are those all manual? Like I imagine a lot of the things within CoinGecko are automated, but is something like that, does somebody have to reach out to you and say, hey, this is going on?
Yeah. Actually, a lot of things are still manual as well. So all those alerts that you see, typically we either read news, we follow the news. And for example, if an exchange got hacked, or like recently Hotbit the servers went down. So we immediately, because this was covered by the major news site like CoinDesk, the blog, and also we kind of, or CoinTelegraph, we kind of put an alert on our site to warn users that, you probably do not want to trade Hotbit on Hotbit, right, for example, because they've been recently hacked, for example. So our team monitors the news and adds them as we see it. Like for example, and whenever a coin goes through a migration, we either find out ourselves or the teams typically kind of ping one of us as well. And we kind of, put the notice so that, especially when a coin migrates from a contract from V1 to V2, and then the contract may still be there and users may still be able to trade those coins on the old contract. So we try to put notices so people are aware that, this is happening. Please do further research before doing your trades or whatever. At least an alert so that people knows at least they know something's happening. But sometimes we try to be as fast as we can, but sometimes things may be slow. But yeah, it's all manual at this point in time. In fact, I would say that every single ticker on the site is also checked manually, and we kind of check to make sure that we kind of map them correctly. It may sound easy, but like, for example, some exchanges have different symbols for different coins. For example, Bitcoin is known as BTC for most exchanges, but it's known as XBT on some exchanges. Right. So kind of have to tag them. And Bitcoin Cash was another example. It was BCH on some exchanges. It was BCC on some exchanges. It was BCH ABC on some exchanges. So we have to manually tag them. We tried automating, but it kind of caused some errors back then. I think with smart contracts and all things, you'll get slightly easier as well, because once a smart contract, the address, if we get the address correctly, then if it's traded on Uniswap, SushiSwap and all, then things may be more automated that way. But we kind of still have some sort of checks at this point in time. Yeah.
For anyone who's been in the space for a little while, it seems like there's just a crazy number of cryptocurrencies right now. But how do you actually see that in the future? Like, I think right now, is it something like 7,000 coins listed on CoinGecko? Yeah, how do you see that growing over the next, let's say, 10 years?
Yeah, so we have a vision that there will be millions of tokens traded in the future. So I hold a view that on CoinGecko in a few years' time, we'll be tracking not just 6,000 or 10,000 or 100,000. We'll be tracking at least 1 million tokens. So we are kind of building CoinGecko to support this future. We are building the foundation, the infrastructure for this future. We hold a view that anything of value that can be tokenized will be tokenized. So, I mean, we'll start seeing individuals tokenizing their time or tokenizing something. It could be anything like fractionalizing real world assets and things. So there'll be a lot of things. I think regulatory hurdle is kind of holding a lot of things back, but that's kind of where we see things are. I mean, we've kind of come quite a distance from when we started. When we started CoinGecko, we only tracked, I think, 30 or 40 coins back then. So going from 30 to 7,000 in 7 years is really a few orders of magnitude. And I think we are still at early innings. Maybe if you had to put it in baseball terms, like we are probably at second base right now. Yeah. So if we have 7,000 coins at second base, like when we hit fourth base, there will be like 1 million tokens easily. So that's kind of where we see things are, and it'll be interesting. So we want to be like the center point there, where users kind of come in and kind of search for all these tokens that they could kind of find in the crypto space. But I mean, for most users, depending on how deep you are into crypto, like most people should really just be concerned on Bitcoin and Ethereum. For those that are not if they're just looking at investments purposes. But I mean, if you are interested in all the others, there's like there's 6,000, like a buffet of coins to look at.
Start going to some of the back pages to get some of the interesting coins for sure.
Yeah.
Bobby, I want to spend a little bit of time talking about the Q1 report that you put out, because it was an awesome report, like tons of great information in there. And for our audience members, it's right at the top of the CoinGecko website. There's a banner there where they can check it out. First off, though, before we get into like some of the findings from that, what is the size of the CoinGecko team? Because earlier when we were chatting, you talked about the fact that, you guys put out a book about DeFi, and there's a lot of education pieces and everything along those lines. So like, what is the size of the CoinGecko team to be able to do this?
So the team's about 30 people right now. Half of them are in engineering. So they do engineering, product design, and then the other half are in research, sales, marketing, and so on. The research team is four, and the team writes the report, writes the books, and do pretty much all those research stuff that you read on CoinGecko. So yeah, that's the team size.
That's impressive. And so what was, before we jump into some of the specifics in the report, in general, was there anything that surprised you about the research or the findings, or like, what did you think the story of Q1 was?
Yeah, I think nothing really surprised me. It's hard to be surprised these days in crypto after going through so many ups and downs. It's like a hack. Oh yeah, just another hack. Oh, Bitcoin going down 30%. Oh yeah, it happens every other weekend. So I don't know. It doesn't really. I think that the story is that Bitcoin is hitting its all-time high. We started to see a lot more at this point in time. A lot of US institutions buying Bitcoin. So back then in 2013, we were talking about the Wall Street and large corporations coming into Bitcoin. I think that time is now. We start seeing MicroStrategy. We start seeing Tesla buying $1 billion worth of Bitcoin. I think even if you're a billionaire, like spending $1 billion on kind of an unproven financial asset class, it takes a lot of conviction to do that. Like, it's not easy even for a billionaire to spend $1 billion of pure hard cash. I mean, that $1 billion, you could kind of use it to, I don't know, build a new factory for Tesla, for example, or things. It's a lot. It's
not just an individual's $1 billion. We're talking about a company. You got like, there's stakeholders, and there's investors, and definitely conviction for sure.
Yeah. So I think the story was kind of, but the story is it's just mainly US institutions buying in. We haven't really seen the Asian institutions, or haven't really seen the mass buying from Asian institutions yet. My guess is the Asian institutions are kind of slower to get started compared to the US institutions. So I think it's just a matter of time. But I think what's more interesting is in the next few years, we start seeing the governments coming in, right? They started making noise, some talks about state governments, and then central banks. I think some sovereign wealth funds are sort of already accumulating Bitcoin. They just haven't announced that they're kind of doing it quietly. So I think that will be interesting. So I think the team was looking at big corporations buying Bitcoin and supporting. I think if you are a fund manager these days, you really need to start thinking of how do you have Bitcoin on your portfolio. If not, your LPs are going to start asking yourself, what are you doing as a fund manager? Why do I need you if I can just buy Bitcoin myself or manage my own funds, right? And it's not that hard to outperform a fund. Like if you just buy Bitcoin a whole, and highly likely you outperform your fund manager. So then why pay the 220 fee to a fund manager if you can just outperform your fund manager by just buying and holding Bitcoin? So that's like a tough question that every fund manager is asking themselves, I suppose. Yeah. In terms of team, that's one. I think a lot as well with regards to the growth in DeFi. I think the team, we're kind of entering a multi-chain world. So, I mean, previously it was kind of Bitcoin, and kind of last year was very Ethereum, everything on DeFi, which was kind of where things was all happening on Ethereum. In Q1, kind of things have sort of moved to Binance Smart Chain, mainly because of the problems inherent in Ethereum's ecosystem, because things are sort of the network's congested, and this resulted in high gas fee. When we started DeFi, making a transaction, a swap on Uniswap was sort of a couple of dollars, for example, but now it costs like, I don't know, $70 to $100, depending on the time when you make a transaction, just to make a simple swap. So it is no longer economically feasible to sort of swap $100 worth of ETH to USDT or vice versa. You kind of need to swap like, I don't know, $10,000 or $5,000 to make it feasible. So Ethereum sort of has become like a network for whales to kind of participate in. And if you are a beginner starting in crypto and you want to get involved with DeFi, it's kind of hard to use DeFi apps on Ethereum. So that's where kind of Binance Smart Chain kind of capitalize on this and kind of build a network, which is a fork of Ethereum, in a more centralized version of Ethereum and a faster version, and what with very low transaction fee. And then they kind of got all the Ethereum apps to sort of clone themselves on BSC, Binance Smart Chain, and kind of build this whole DeFi ecosystem, which is great for retail users. And then if you are looking to trade or you farm with $100, you can kind of easily move your funds from Binance to BSC and then start doing all these DeFi apps, right? This DeFi stuff. But what we're seeing is it's not just things are happening, not just on DeFi. We start seeing things happening on the other chains as well. Solana, Avalanche, Phantom. So I think, and this is a challenge that we face at CoinGecko as well. How do we build a CoinGecko that will support this multi-chain future? I mean, CoinGecko as the infrastructure, the tech stack was sort of built for centralized exchanges. If you think about it, back then it was just the Coinbase, there was no Binance, the Coinbase, the Huobi, the OKX, and these centralized exchanges. And then we sort of have to make the migration to decentralized exchanges like Uniswap, Balancer, and so on. And now we're making a migration again to a token that is represented on Ethereum, on BSC, on Phantom, and is traded on Uniswap, PancakeSwap, and some other exchanges, all these DEXs that are building up. So yeah, that's kind of the team. So a lot of time will be spent trying to educate users on a multi-chain world. And the research guys just wrote a research piece yesterday on how to get started with yield farming on Solana. So Solana could be an interesting one this summer, but it's a completely different infrastructure. So there's quite a steep learning curve to get started with Solana, but it could be interesting to spend a time to learn about it.
Do you think, given that it was, CoinGecko was originally built kind of for a different purpose, or at least to serve different means of getting the data you needed to get, will you at some point need to potentially sort of start from the ground up and build a new CoinGecko from a technology standpoint? Or is it for the foreseeable future just going to be iterated upon and evolved?
Yeah, it's most likely going to be iterated upon for the time being. But it's not like you have to build a new stack to kind of collect those data that were previously not available and feed it into the database. So some parts can be reused, but some parts need to be rebuilt from beginning again. So a simple example would be how we consume data from exchanges API. A lot of centralized exchanges, they have a REST API that provides all this information on the price, volume, and so on. But when it came to DEXs, the DEX, when you ask them, hey, can I have your API to get the price volume for the coins traded on Uniswap, for example, or some of the other decentralized exchanges, they will just say, data's all on a blockchain. Go and read Ethereum and get the data yourself. I was like, it's easy for them to say that, but from our point of view, it's like, there's a lot of work to do all these things. Thankfully, the graph came out with subgraph and kind of popularized that method of getting on-chain data. So a lot of these DEXs, they have subgraphs, and we rely on these subgraphs to read those on-chain data and populate them onto CoinGecko.
One of the things you talked about was some of these institutional buyers, and my understanding is CoinGecko actually tracks that, right? Like there's a spot where you can see kind of all the companies. I think the report stated that they own something like just shy of 1% of all Bitcoin. But how do you see, maybe just like, I don't know, it's tough to predict, but just thinking how that number, maybe not of the percentage of Bitcoin, but just the percentage of or the number of companies, how that's going to grow. Obviously, if you built that space, that page, we're expecting a lot more than 21 companies before too long.
Yeah, we started tracking the list of companies holding Bitcoin and Ethereum on their balance sheets. And I can't remember the exact percentage these days, but maybe it could be 1%. But I would expect that this number to increase over time, that percentage. And these companies, when they hold Bitcoin, they're not like traders. They buy and sell. I mean, maybe Elon Musk is sort of a different guy. He kind of just sold 10% of it. But I would expect the majority of these institutions to be holding the coins long term because they're sort of buying it as a hedge against inflation. And kind of some of the conversations that I have with some of these fund managers and institutions, and I hear from things is that when people start thinking of, when these corporations start thinking of holding Bitcoin on their books and all, for example, they don't think about holding like X amount of dollars of Bitcoin. Yes, they do, but they also start thinking of holding a percentage of the network. So if you believe that Bitcoin is going to hold value over the long term, and for example, if you have 1% of the global market cap for your corporation, and if you think that there is a non-trivial probability that the US dollar may completely collapse and Bitcoin may take over, you might want to have a 1% of all the coins in circulation for Bitcoin. So this would mean that 1% of entire Bitcoin supply would be 210,000 coins. And if you want to buy 1% of the coin, then you just spend whatever amount of money that you need to spend to buy 1% of the supply right now, because the price may just get increasing if everybody start thinking along the same line. So a lot of people are thinking along the lines of a percentage basis. So I don't know who exactly or what exactly they're thinking, what percentage are they thinking, but if you start framing the conversation about owning a percentage of the network, like it kind of changes the way you look at things.
Yeah,
ownership. Yeah.
You mentioned we talked a lot about Q1 and some of the things that took place there. One of the things we haven't talked about is NFTs, and NFTs have really blown up in popularity. What are your thoughts around NFTs, and are they, as some people have suggested, kind of like the new gateway into crypto for people who otherwise aren't, tech enthusiasts or looking for an alternative option to save their money, or things like that?
Yeah, I think you brought up a good point. I completely forgotten about mentioning about NFTs. So I think you're right. A lot of people who may or may not be interested in crypto, NFT is a gateway drug into getting them into crypto, because NFT is kind of easy and very intuitive for people to understand. People have been collecting non-fungible items for years. They're just not in a tokenized form. They collect baseball cards, Pokemon cards, Magic Gathering cards, and all kind of, every single furniture that you collect at home. Your grandma collects furniture, for example, or Chinaware. Those are all non-fungible items, or art. A lot of it transcends the traditional world. People understands it intuitively, just now representing it in a digital tokenized format. Journalists understands them. They know how to cover the news as well. Whereas when it comes to explaining Ethereum or Bitcoin, it's really hard to get into the details. And then Bitcoin has its own like colored past about it being used as drugs, and a lot of people still thinks of it as a money that drug dealers use and the money laundering purposes, although it's not a really good idea to do that, to use Bitcoin for that. But yeah, I agree. But I think the Beeper's piece that got sold for $69 million kind of got a lot of headlines globally, and people started taking notice. I think the guys at Dapper Labs with the NBA Top Shot has done a fantastic job with kind of making things go mainstream. So I think it taps onto the large audience that the NBA has. So a lot of people are interested in following NBA, and they, instead of collecting physical trading cards, they now collect moments as NFTs. So that is interesting. I think the price increase in all these NFTs as well kind of got people excited. They kind of, I bought a $9 pack on NBA Top Shot, and now suddenly I got a rare card, and this rare card's worth, I don't know, $10,000, for example. And people get interested, and a percentage of users convert to actual users and start looking at all the other NFTs on the other platforms, on Ethereum, for example. I think I was reading an article earlier today. There was a CNBC Jim Cramer, I think. He said he purchased some Ether. He has some Ether because he bought it to kind of bid on some NFTs from the Time magazine cover. They kind of issued NFTs for the cover. So he bought Ether because he wanted to participate in an NFT auction, and inadvertently he became an Ethereum convert, I suppose. So So I think definitely we'll start seeing a lot of NFT growth this year, and a lot of people coming in because they sort of understand NFT and what it could do.
Yeah, that Time magazine, I think that was the Winklevoss twins were on the cover of it, and they did the nifty drop. So I guess a question for you, Bobby, then is, you mentioned it earlier that with your traffic, it very much follows kind of the interest in Bitcoin and how the prices are doing and that kind of thing. And people have their different theories of cycles and whether it's, based on a full 4-year bull run or that type of thing. It's so hard to predict and no one really knows for certain, but do you have any theories or any gut feelings on this for someone who's been in the space so long?
Yeah, I mean, the general school of thought is that Bitcoin is the reserve currency for crypto, and there are a lot of large traders or crypto whales where they sort of denominate their wealth not in terms of USD but in terms of the number of Bitcoins that they have. So they just want to hold Bitcoin. And what happens is almost every single cryptocurrency is correlated with Bitcoin. So when Bitcoin goes up, the other altcoins just goes up at a higher rate. So because it's more volatile. But when it goes down, the other coins just goes down at a larger rate as well. So it's it's more volatile coins. And the NFT market is actually very correlated with the crypto market as well, because when people are rich after they made all the trading profit, they want something to represent their status symbol, for example. So they end up, and because they're rich, they are less picky on how they spend their money that they've earned. So they don't mind bidding, for example, 100 ETH on a CryptoPunk, for example, just to put it as their profile picture, and they can use that as a way to brag to the other friends that, hey, I've made enough money to spend 100 ETH to buy this ape CryptoPunk. You can't, and I'm the only person that have this NFT. No one else has it. It's kind of like how some people kind of show off their limited edition Yeezys or their Rolex that is limited edition. So people kind of do that, but these days in a more digital way, which is represented as NFTs. So, but when the market crashes and a lot of people start losing a lot of money and they want to have, I don't know, USDC or USDT or just cash out to dollars in their bank account, would expect to see the NFT market to also crash. And that's kind of NFTs, generally there's less liquidity. So if you buy NFTs, I would say only buy NFTs that you like and you will be willing to hold for the next 4 years or 5 years, for example, because when the market crash, like there won't be much liquidity for it, and you can sell it, but you have to take a massive loss on that NFTs. There will always be buyers. I'll be buying, but at the bottom rates. I won't be buying at high prices. I will just be waiting on. If it's high price, I'll be more selective on what I buy. But when it's dirt cheap, like I could just buy and buy, for example. Yeah. And there's a lot of people like this who be buying at at rock bottom prices, for example.
So we're getting near the end, and before we get there, I'd love to know what's in store for the future of CoinGecko, and just based on some of the things I've seen in the last year. I mean, you guys are constantly evolving the platform. I've seen the portfolio feature was added, I mean, relatively recently, maybe that was 6 months ago or so. And prior to that, you guys were the first ones I saw categorizing the different tokens, having the DeFi tab, become a thing and sorting that. And now there's NFTs and so you guys are constantly evolving. But what's in store for the future? Maybe not necessarily just the short term, but like the vision for, where you go with CoinGecko, aside from, having 1 million coins listed.
Yeah. I think categorizing coins sounds like an easy thing, but it's actually a lot of hard work. And I think a lot of things that we do is we kind of start things out and then we try to improve it over time. So a lot of this, the continuous improvement processes. So I think the sector has kind of grown to such a way where we can kind of categorize all these coins. So probably want to categorize them nicer, building on the portfolio with a lot of ideas that we have to kind of make a better portfolio. A lot of things that we could sort of improve on the website, on the app, minor improvements, UI, UX improvement. There's so many things that we can do. One of the things that we recently launched that we are quite happy on, proud of, is the launch of CoinGecko Premium and Premium Plus. CoinGecko Premium, it's kind of a subscription model for CoinGecko where users get to collect candies faster. Candies are a loyalty point on CoinGecko where you could sort of collect points and redeem them for merchandise on CoinGecko or discounts from all the other crypto firms out there. For example, you could get a discount on your Trezor or your Ledger, for example, and kind of build up so premium kind of build up the features on the premium side, for example. So the aim is to sort of put in some of our API, we have a pro API that sort of build up, merge them onto the premium feature and let users kind of track this on their Google Sheets without much errors, and to add more data analytics research to kind of provide value to our users. So we have a lot of growth on the premium side for CoinGecko, and then we'll be seeing, I think a lot of challenges ahead for us as well. I've mentioned some of them, like the multi-chain future that we are sort of entering, a lot of reiterating. So some improvements you see on the front end, but a lot of back end improvements as well for us. So yeah, those are some of the things that we'll be working on in the coming months.
Nice. As a CoinGecko whale with my candies, I got a solid 5,000 plus candies just chilling. So I'm gonna have to look at how best to spend those. Maybe look into premium.
All right, so Bobby, we like to end every episode of Show Me the Crypto with a 3-question segment that we call You Had Me at Crypto. So Ulf's gonna ask you those questions.
All right, Bobby. Number 1, who's your favorite person to follow in the crypto space?
I like Sam Bankman-Fried, SBF. I think he writes some pretty interesting things. I like to see how he kind of grow Alameda, grow FTX, a kind of inspiration for me as well. And he writes some giga thread on the state of the market, because he runs the market making firm Alameda as well, so he knows a lot of the things from the trading point of view. So I find that I learn a lot of things from SPF. So I think it's quite an interesting person to follow.
Nice. Question 2 is, what will the price of Bitcoin be 10 years from now?
Oh, interesting. I don't really have... I can say for sure that it'll be higher than now.
Can you like narrow that just even like a little bit?
It's very hard to say, right? So, I mean, I generally don't like to give price predictions, but if I have to give one, we are kind of around the 60K range right now. I think in this cycle, we will most likely hit 6 digits. So we'll probably break past the 100K range for Bitcoin. And then who knows how high we will go. And then before the market crash, I think we will hit some pretty ridiculously high number for a short period of time as a headline number. And then it crashed 90% from that number and it hold on for a few years. But if you remember that I said earlier that we'll start thinking of institutions buying and holding for a few years based on the percentage of the supply has in that they want to control. Governments will start thinking the same as well. If a central bank, and we start seeing a small country central banks starting to hold Bitcoin as a mix to their reserve. So instead of holding USD, British pound, euro, JPY, start holding Bitcoin as a small percentage as well. And once the first central bank starts doing it, and everybody the rest will kind of follow. And when people, instead of holding gold in their vault, they may hold Bitcoin in their vault, and things may change. I think a good way to start thinking as well is look at some of the Bitcoin stock to flow model or some of the other models. And a lot of these things you sort of show that, it's going to hit like 7 figures or so. So as we go along. So because the incoming supply of new coins for Bitcoin just constantly reduces every 4 years. So there are many different models for Bitcoin, but I won't be surprised if it starts hitting 7 figures, I suppose. Yeah. But who knows, right? I mean, maybe there may be a major bug or quantum computing kind of made Bitcoin obsolete and it goes to zero. So, there's a non-trivial probability that it will go to zero. So I will kind of caveat my answer. It could go to 7 figures or it could go to zero. I don't know, but it could be interesting to monitor.
All right, third question. What's the most underrated coin or project in crypto?
Oh. Generally speaking, I would say the top DeFi coins. So a lot of these DeFi projects, they have cash flow generated to the protocol, and some of them, they all have a governance or a DAO in place, and the DAO may decide to distribute the tokens that are attributed to the protocol to the token holders directly. Maybe like a sushi swap, they go directly to the token holders, or they may just buy and burn tokens from the market, which provides an upward pressure for the coins. So I would say, like, look at all the top DeFi coins, right? Uniswap, SushiSwap, Banco, Balancer, all those things. Like that's, and then the Aave and the Compound and all. Like in 5 years' time, I think things will be interesting. But of course, in the short term, like things may crash when the market crash and all. But one thing's for sure, right? Like we are seeing a trend where every centralized financial services is being replicated in a decentralized manner via DeFi. When you start having projects earning high yields, and we are living in a zero interest rate environment, it's just a matter of time before the institutions start looking for ways how to sweat their assets more, how to get like 5%. I was telling people in crypto, you could get sort of a risk-free interest on your USD at around 25% on crypto these days. You put your USD in a yield farm earning 30% and take 5% of it and buy insurance on it, and you have a risk-free way of earning 25% per annum. A lot of TradFi guys don't know how to do this, but it's just a matter of time before they come in and the billions of dollars will come in and flow to DeFi. So it's just a matter of time before all these DeFi tokens start having a re-rating. So I would look at, there's no one particular coin, I would say, but the range of DeFi tokens are kind of my choice to look at.
Cool.
Bobby, this has been an awesome interview. A ton of great insight that you provided. Thanks so much for joining Ulf and I on this episode of Show Me the Crypto.
Thank you very much. It was a great pleasure, and I really enjoyed my time today.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.